Hey everyone, welcome back to Corporate Decoder. Today we are diving into the world of City Office REIT. It might sound boring, but trust me, even office buildings can have their dramas, especially when the numbers don't quite add up. We're going to look at their latest report and see if this real estate company is building a solid foundation or just rearranging the furniture. This is a current report, kind of like a snapshot filed with the Securities and Exchange Commission, or SEC. This report tells us about important events that a company needs to share with its investors right away. Think of it as a corporate breaking news bulletin. This one is for City Office REIT, a company that owns and operates office buildings, mostly in cities in the southern and western United States. The date on this report is May 2, 2025. This tells us when the event being reported happened. So whatever we're about to read about occurred around that time. That's the full name of the company we are looking at today, which is based in Vancouver, British Columbia. This section is just standard legal stuff, making sure they aren't using this report to promote anything shady or influence anyone improperly. Here we see the types of stock City Office REIT has, including common stock and preferred stock. These are traded on the New York Stock Exchange under the ticker symbols CIO and CIO Pro respectively. These symbols are like short names for the stocks, for those that trade them. This is where the real news starts. City Office REIT released a press release on May 2, 2025 about how they did financially in the first 3 months of 2025, that is, the quarter that ended in March. We'll get to the numbers soon. This is the actual press release which is attached to this report. It gives all the details about their financial performance. The SEC requires this to be included, but also states that this isn't legally as filed as other parts of the report. Here's a list of the exhibits, including the press release itself. This just confirms that the report is signed off by a company officer, legally binding the CEO to what's inside. The report was signed by James Farrar, the Chief Executive Officer of City Office REIT on May 2025. Now, let's move to the important part and try to understand the story that the numbers tell. I went ahead and found that press release for us. City Office REIT reported their results for the first quarter of 2025. Now, REIT stands for Real Estate Investment Trust. These are companies that own or finance income-producing real estate. Think of them as landlords on a large scale. In the first 3 months of 2025, they brought in about $52.8 million in rental income. That's the money they collect from their tenants every month. It sounds like a lot, but it's important to see if that number is going up or down compared to previous years. Here's a critical number. Same-store cash net operating income, or NOI, decreased by 5%. What does this mean? Well, NOI is basically the profit they make from their properties after deducting operating expenses, but before debt payments and taxes. Same-store means they're only looking at properties they owned in both this year and the previous year, so it's an apples-to-apples comparison. A 5% decrease suggests their properties are not generating as much cash as they did before, possibly due to higher expenses or lower occupancy. Imagine losing 5 out of every $100 you made last year from the same properties. That starts to hurt after a while. Their occupancy rate was 81.8%. This tells us how much of their office space is actually being used by tenants. Ideally, you want this number to be as close to 100% as possible. Anything below 90% suggests they have a lot of empty offices. An 81% rate is a yellow flag, implying they are struggling to keep their buildings full. The weighted average lease term increased to 6.6 years. This is the average length of time remaining on their tenants' leases. A longer lease term provides more stability because it means they have guaranteed income for a longer period. 6.6 years shows commitment from tenants, which is generally a good sign. Funds from operations, or FFO. This is a key metric for REITs. It's a way to measure their cash flow that's more accurate than traditional net income because it adds back depreciation and amortization, which are big expenses for real estate companies, but don't actually involve cash leaving their pocket. So FFO is often seen as a better indicator of a REIT's ability to pay dividends. The company's core FFO was negative 0.03 cents per share. This means that even after adjusting for those non-cash expenses, they're not generating enough cash to cover their dividend payments, if they have any. A negative number is definitely a red flag. It might mean they have to borrow money or sell assets to keep paying dividends. They reported a net loss of $7.3 million. This is the bottom line, the actual loss they incurred after all expenses and revenues are accounted for. It's never good to see a loss, especially for a company that's supposed to be generating income from real estate. We can see reconciliations to FFO here. So what's the big picture here? On one hand, City Office REIT has some positives. They have a fairly long average lease term, which means they have some stability in their rental income. However, their occupancy rate is not ideal, and their same-store NOI is decreasing, and critically, they are running at a loss with negative FFO. Assessing City Office REIT's direction, I would say caution is warranted. The negative FFO and the net loss are major concerns. They need to find a way to increase their occupancy, cut costs, or both. Otherwise, they might struggle to maintain their dividend payments and keep investors happy. One notable risk is the overall health of the office market. With more people working from home, the demand for office space may continue to decline. That would make it even harder for City Office REIT to fill their buildings and generate income. On the flip side, if they can successfully attract tenants to their properties, they could see a significant turnaround in their financial performance. In conclusion, City Office REIT's recent report raises some serious questions about their financial health. While they have some positive aspects, the negatives outweigh the positives. Investors should carefully consider these risks before investing in this company. Thanks for watching. If you found this breakdown helpful, please like, comment and subscribe for more corporate decoder videos. Let me know which company you'd like me to analyze next.